Hello everybody and welcome back to GMD Investments. Reading, in my opinion, is the most powerful source of education in the world. I found one thing pretty much all the mega rich do is read a lot. Bill Gates reads a book a week and takes steps to ensure he absorbs every bit of information he reads. Warren Buffett spends 80% of his day reading. He reads up to a staggering 500 pages a day, ranging from New York Times, Wall Street Journal, Financial Times, and then dives into financial reports pretty much the rest of the day. In the early days of Buffett's investing career, he would read up to 600 to 1,000 pages a day. Out of all the books he read, Intelligent Investor was the one that so-called changed his life and opened up the doors to intelligent investing. Intelligent Investor is a great book and I highly recommend if you want to get into stock investing or any source of investing really. As we can see, the book has 20 chapters and contains about 530 pages in total, so it's definitely not considered a small book. Buffett's favourite chapters of the book is Chapter 8, The Investor and Market Fluctuations, and Chapter 20, Margin of Safety. He explains these chapters are essential to read and to be made a priority. The moral of the story is that being an intelligent investor has nothing to do with intelligence and all to do with character and certain principles. If you don't believe this statement and think it's all a load of rubbish, let me take you back in time to one of the smartest men to ever live, Sir Isaac Newton. Sir Isaac Newton owned shares in the South Sea Company, the hottest stock in England in 1720. Sensing that the market was getting out of hand, Newton dumped his South Sea shares, pocketing 100% profit, totaling £7,000. But just months later, swept up in the wild enthusiasm of the market, Newton jumped back in at a much higher price and lost £20,000, equivalent to more than $3 million in today's money. For the rest of his life, he forbid anyone to speak the word South Sea in his presence. The intelligent investor dreads a bull market since it makes stocks more costly to buy. So as long as you keep enough cash on hand to meet your spending needs, you should welcome a bear market since it puts stocks back on sale. This really is the essence of investing. Plain and simple, it's all about buying something to a discount to what it's really worth. This is why when there is chaos in the world and everyone is panicking, huge opportunities in buying securities at a discount opens up, just like banks were at a huge discount during the financial crisis. And Buffett and Munger went shopping, buying up a load of shares, betting big. One Up on Wall Street is next on my list. This is the best book I believe for beginners who are just starting out. This was the first investment book I ever read, and I believe it truly changed my life and changed the way I view investing today. I learned to never invest in a company before looking at the company's earning prospects, financial condition, competitive position, plans for expansion, etc. etc. You want a company that is not complex and that anyone could run. Something that has poor management but no competition is better than something extremely advanced, amazing management but a huge competition. Peter Lynch looks for boring company names that are simple and almost sound ridiculous. A boring name and a boring business with terrific earnings and an excellent balance sheet go hand in hand to be the perfect stock to buy at a discounted price before the company shoots up and you sell your shares to the trend followers. This is why I said this book changed my life, because it made me realise I was looking at investing in the complete wrong way. If you're looking for companies that have all the hype and rage, you won't make much money, and in fact, you'll probably lose money. However, if you buy stocks that fly under the radar and that Wall Street haven't already brought up, that have sound economics, good balance sheet, etc., you're truly onto something golden. The next book is called Security Analysis, and is considered the Bible of investing. It's a huge book and contains around just over 700 pages. I wouldn't start this book if you are new to investing, but as you go on, this is a must read as it explains all the accounting and analysis that is needed when picking stocks, and really just talks about everything. I would only read this book if you are truly interested in investing. Security Analysis was created by the godfather of investing, Benjamin Graham. He was the founder of value investing and taught Warren Buffett the ways of intelligent investing. I think Warren would agree, without Ben Graham, he wouldn't be where he is today. Warren Buffett and the Interpretation of Financial Statements is a wonderful book and dives into what Warren looks for when finding the next big investment. Warren looks for companies with a competitive advantage, such as little debt and a consistent growth in earnings, also a high profit margin, little money spent on R&D, low PE ratio to make sure he is getting stocks at a discounted price, and the list goes on and on. An alternative to this book would be one that was made by Benjamin Graham. I have read both, and in my opinion, I prefer the more updated Warren Buffett version. I feel the Ben Graham book just states the definitions, whereas the Buffett version goes into detail and gives you ratios and examples of actual analysis. The last and final book is called the Dhandho Investor. It's created by the legendary investor Mohnish Pabrai. Mohnish was a so-called cloner of Buffett, so he has learnt from the very best. The main principle that stood out to me in this book was to buy distressed businesses in distressed industries, because like we said before, this is where the panic and fear comes into play and the markets undershoot, putting these stocks on sale and forming a great buying opportunity. He also touched on risk arbitrage, which is essentially where, say for example, gold is trading in London for $600 per ounce and is changing hands at $610 per ounce in New York City. An arbitrager can buy in London and immediately sell in New York, capturing the spread. This is an example of commodity arbitrage. You get all different forms of arbitrage, but pretty much it's all the same process. I feel these 5 books are the top books for investing. There are many absolute classic investing books out there, but for me, these 5 are the very best. I'd like to thank everyone for watching this video, and if you enjoyed the video, subscribe for more content going forward and to stay up to date with market news, investing ideas, and the like. It's been a pleasure. Until next time.